did 20, so you can, if you want to. And some helpful information. I wasn't sure how many was here.
Excuse me, Ida, would you like to, do you want to use the computer at all?
No, I didn't know you had one. So, I just did some helpful information because I wasn't sure what needed to be covered. The last time I covered was when I was here. I covered solar energy and equity lines. I did cover a little bit of that, home loans, the last time, but it just went off a little bit the subject matter. I'm going to cover some information, and then I wanted to bring James Madison up because James recently joined our bank from Citibank, and he is our mortgage loan representative for the bank. And he can tell you about our loans, which we kind of specialize in portfolio loans now, which is great for us because it's something different that our bank has gone into. But I kind of deviated from mortgage loans to kind of give you a little idea of what my customers have been asking me. One of the things that they ask me, and from a bank perspective, is what about FDIC insurance that you've heard? Normally the general question is, what do you insure up to $250,000? And the general answer is yes. But if you go to the FDIC website, the government website, and you go to EDIE, E-D-I-E, you can find out that banks can insure more than the $250,000, is depending on how you structure it. So if you go to that website, you can do that. You can actually see how much you can put under what names, how you can structure it. And like one customer, I was able to have $1,250,000 at my bank, all covered. So keep that in mind, and you don't have to keep your money all over the world in order to keep it insured at one bank.
Has that always been the case, or is that something recently?
It's always been the case.
Wow.
Just a lot of people just aren't aware of it. They just, every investor or something is always just saying, well, just put $250,000 there and you're safe, and then you're running around to every bank trying to keep it all over the place. And if a bank is offering a great rate, you're not able to take advantage of it, because you think I can only get $250,000. So there. So go to the website fdic.gov. It's in the handout that's there, and it'll show you how to do it, structure it so that you're safe. Okay. The next thing that I get asked, I'd like to get a copy of my credit report that you pulled on me. Give me a copy. Banks can't give out copies of the credit report that we pull on you. I can't. So you can ask them if I can't. Besides, the ones that we get, they're hard to read. They're for institutions. But what we do is we tell you where we got it from. We use Experian. But there is a website, the annualcreditreport.com, that you can go to, and you can get your free credit report once a year. So I've given you that website and a copy of that website so that you can go there and get a copy of your credit report, because I get that asked all the time. And it's free, so you can go there. And one of the other things that I'm getting a lot of now, because fraud is prevalent at all institutions, is I got a check in the mail. It's a legitimate check. It said I want something, I want to deposit it. Can I get the money now? I just got one today from one of my customers, and she says, well, I was trying to borrow some money, and I've been talking to them over the phone. I didn't understand them because they had a strong accent. So they emailed me back and forth. I wanted to borrow the money, and we've been going back and forth. She said they were going to send me the check. They sent me the check. They wanted to know when the check had cleared, and I thought I would bring it in and let you see it. So, check was legitimate. It looked like a legitimate check. It looked valid. So I get on the internet, and it's an auto parts manufacturer. Why would they be loaning her money? And so I called and talked to the company, and it was a legitimate check. The check had been issued. It was a valid check number, valid dollar amount that had been issued, but the payee was not her. It was to a business. So they had washed the payee out and put her name on it and sent it to her. And they were waiting for her to deposit it. And then actually at that point, they would then try to scam her to get information, either ACH out of her account or wire it or send it back to her. So I'm trying to make people aware that be careful. They are out there. They are all over. They are using, if you have businesses, watch your account. They scam, they see your checks, they make photocopies of your checks. The check number is one that you've issued. They use it, they clear your account because you're not watching your account and your money is gone. And as a business, you don't have the same rights as consumers. You don't have the 60 days to look at your checks and review them and say, it is not mine. You have 24 hours. So if you have a service, if your bank has a positive pay service where you can upload your checks that you've issued and they can watch it for you or call them back, it's well worth to pay for the service because you don't want to do that.
Are you set up to be able to have checks deposited with your cell phone to Rabobank like some of the banks are doing?
We are not. And the big banks do that, but they have deep pockets. They can take those losses. Community banks probably will not do that because when they scan that check, the check is still in your little hot hands and you can go somewhere and deposit that check, which means that it could be duplicated again and again and again. We don't want to risk that. We as a community bank don't want that potential loss, so we don't want it. No.
Wire transfers online?
Wire transfers on, good question. We take it very seriously. We require that institution or that business to have some sort of credit worthiness with us before we will allow them to use wire transfers online. Whereas big institutions, no problem. Again, deep pockets, they can take the loss. But we feel like when you send it and it goes in the system, it has to go to feds, and then you may not have the money to a certain extent once you push the button. The money may not be in your account at that time. There's a lapse time in there. And so we want that credit worthiness there. So big banks, they can take the loss. Little banks don't want to take the loss. So that's why you see the difference between big banks and little banks taking on the big wires or the ACH, the automatic transfers, because there's a time lapse between when they push that button and when it's sent off out of the bank. Any other questions? I thought I'd kind of go over some of those things because I think you as investors, you're going to see things like that because you're wanting to get your money out of the bank and into the bank and over here and over there really fast, and you're going to run into some of those problems when you're trying to get it from point A to point B, and your bank is going to say, no, you just deposited that cashier's check. You've got to wait till we get the funds, and they're saying, you have the funds, you have the check in your hand. Well, we don't have the money, actually, because the money is still over at the bank until the check actually clears. Even though things are faster, they're not that fast yet. So they're called collected funds when we actually get the money from the bank. And that's why banks will tell you, no, we have to wait for the float time to clear. So when you're looking at those funds coming in, when wires come in, those are there that day. You may find a bank that will tell you, we will give you the funds tomorrow. If the funds come in today, you will have access to those funds tomorrow. So that's why they say that, because they want them to be actually in the account. So you can find that as investors, those funds are coming in and out, floating around. And the last question is, you have all my information on the computer. you see my account. So will I qualify for a loan? I get that all the time. So we see, and a bank is, the checking account is like an ad machine. It adds the checks in, subtracts the checks out. So no, I don't know if they're assets, liabilities, expenses, incomes or whatever, income or whatever. So we do have to have an application. We do have to do the whole thing, like what he says. Gone are the days where they will say, yes, you qualify, yes, I'll give it to you over the phone type of information. We need to verify everything now. So we have to have the tax returns, the verification of income, the verification of assets, all of that. So we need to verify the primary source of repayment, which is your income. We need to verify the secondary source of repayment, which is usually the collateral that we take, which would be the home or a car or whatever that is. We need to look at your credit, and credit is very important. We look at credit score. So it's very important that you keep track of your credit score and look at it at least once a year. So I recommend that you take a look at your credit score once a year on it. Does anyone have any questions before I turn it over to them?
What would you say, generally speaking, the majority of loans you're doing, are they refinance, are they purchase?
Actually, I have done only one equity line of credit this year so far, only one.
Equity line?
I have referred, how many loans have I referred to you? One loan?
Mm-hmm.
Only one mortgage loan to him. Let's see, commercial real estate, I think I have only referred one. I'm working on one now, non-owner occupied.
Is that a function of how many people are coming in and asking for loans, or is that a function of people you're turning away that don't qualify?
Both of asking and not coming in. A lot of people have credit issues. They know that they don't qualify because of the tough times. Yeah. Remembering, in this piece of paper, banks look at historical to determine if you can pay in the future. And remember, the last 2 years are horrible, so they know that they're not really going to qualify for paying into the future. So I think that's what's happening now, is that is what's true. So it's tough.
You made one other reference in terms of the big banks versus small community banks, meaning Rabobank.
Meaning Rabobank. We have traditionally been very conservative in our lending. We've always been, even as Mid-State Banking Trust. We started in '61. We were bought out by Rabobank in 2007. Yeah. But we were conservative, and that's probably why we didn't have the problems that all the other banks had, because we were always, we verified income way back when other banks were scoring. We did not, we verified, and so we didn't have to go through the problems of real estate problems that other banks did, and that's why we have the standing that we have, because we verified everything.
You guys like profit.
So we were very fortunate in that manner. However, now, we're still conservative, but everybody else has to go through the things that we were doing before anyway. But we're seeing that our customers are having to.
And in terms of the bank having a rating, in terms of its strength, Rabobank has a high rating.
One of the
it's
strongest.
Conservative.
Yeah,
it has
6th
strong rating.
safest in the world. So we are very, very safe.
How did they come up with the name? That's the only question I have. How did they come up with the name Rabobank?
It started about 150 years ago in the Netherlands. 2 German banks. The first 2 letters of 2 banks, 2 German banks or Netherlands banks. The first 2 letters of each of them were put together and added bank at the end of it, and never thinking that 100 and something years later they would be in 35 different countries.
Wow.
So that's how they got the name.
Smart Germans.
And they are specialized in agriculture, and they wanted to be in a state that did agriculture. And California, agriculture is very strong in agriculture. Their forte
eighth largest economy.
So if we plant the front yard, do we more like?
Yeah, you can do that.
One of the plant strawberries too.
So, James, would you like to talk?
Sure, let me expand on that. So the world needs food, more people every day. So Rabobank is an agricultural lender, and that means that Rabobank is comfortable lending to people that have crops or farms or hobby farms, or they want to start a vineyard. We will seriously look at that. We're very comfortable making agricultural loans. I'm not part of that. That's a separate division, but our underwriter, we know enough about agricultural loans, lending, that if you have a house on 7 acres and you have you have citrus trees, or if you have vineyards, we will seriously look at that. Now, we will charge more for the appraisal, of course, but we will underwrite that loan. So there are properties in SBREIA. The executives from Rabobank came over and they noticed that all those Dutch flower growers were Dutch, growing flowers. So they've been working their way through them. So it's been profitable for them. We are an ag lender, and we do have a professional cycling team. So I'm a cyclist here in Santa Barbara the last 40 years. I knew about the cycling team before I affiliated with a bank. It's how they market their bank in Europe, because cycling, second biggest sport after soccer. People are rabid fans. However, let me get into why I'm here. I'm a mortgage loan representative for Rabobank. We have 6 branches in Santa Barbara, from Carpinteria to our branch in Toledo. So if you walk into any one of our branches, you have an interest in owner-occupied, non-owner-occupied, second homes, we can help you with that. I'm a subscriber to the New York Times. I have an interesting comment about the New York Times. I worked for E.F. Hutton & Company during the stock market crash of '87. And my experience, as it was depicted in the New York Times, was more like what was written about in the New York Times than the Wall Street Journal. So I started reading the New York Times more, and you get more than just the business. But this is an article today on real estate, and this is some interesting questions, observations, more housing starts, hedge funds looking for investments, bankers are easing up with wealthy clients. So it looks like we are getting close to the bottom in real estate. More and more people are talking about that. That's bullish. You know, when people are saying, you know, I'm not going to touch the real estate market, but here you are. And it's just how many years ago? 4 years ago until the crash started, and here we are. So next few years, real estate's going to come back. So at Rabobank, we have what are